for today's training. Today is a great training. This is probably one of my favorite trainings, other than the one where we calculate self-employed borrower income. This is the one that gives you the opportunity to build rapport with the customer. This is that first call. You're making the call, you're sizing up the deal, you're vetting the borrower, you're seeing what are the viable quote options to send them some quotes, have them click on the Start My Loan Application button and submit the loan application. But it all starts with an effective call and gathering of information and completing a proper analysis. So let's get right into it for mastering the initial sales call for loan officers. And I see we got a full house today. That is amazing. So first thing to be concerned about here is completing the initial assessment, right? That's when you make the call. Certain things to consider here. First and foremost, remember, always be a loan consultant and add value to the transaction. There are hundreds of thousands of licensed loan officers in the United States, but not every licensed loan officer is a loan consultant. Simply we have application takers out there that all they do is just take the application or make the initial call and they pass the baton down the road and that's it. No more contact with that borrower. And we have our loan consultants that assist the borrower throughout the process, especially at the initial call when we are sizing up the deal, providing a consultation on what is the best course of action. That's how we train our loan officers here at the Mortgage Calculator to be loan consultants and add value to the transaction. Because remember, you only get one chance to make a first impression. We want to make a great first impression. You want to gather as much information as possible to determine the viable program options for the borrower before a quote is sent. So this is very important to know because the purpose of calling the borrower is not just to let them know you exist, tell them thank you, I see your information, let me send you some quotes, and then talk to them about what are the viable options. Because in that case, you may have sent a non-relevant quote to that borrower or a prospective borrower. At this point, he's your contact. And then they may start an application for a program that they really wouldn't apply for, and that's not applicable to them. And then you may end up having to cancel the application because it just could not go anywhere because they never should have received that quote in the first place. Remember, borrowers are not the licensee. We're the licensee. If they receive stuff from you, they're going to assume, unless informed otherwise, that that's the viable option for them to click on. They're going to be really happy to get it. Then they're going to click away and they're going to submit that application. So just make sure that you follow the steps that we're going to detail here. So first thing is determine the transaction type. Now, some of this may sound a little bit, mundane, but believe me, connect the dots, dot your I's, cross your T's, and stay on the right path and you'll do okay. So determine if it's a purchase or a refinance, right? Transaction type. Now, you want to discuss with them 4 components of the transaction. Right? First component you want to discuss is credit, right? You want to ask them, what is their credit score? How many trade lines do you have, right? Open trade lines, closed trade lines, a year, 2 years. Because remember, we have in some cases minimum credit score requirements, and in some cases we have minimum trade line requirements. So you just want to get a picture of what you're dealing with. You want to find out if there's any credit events. You want to ask them what is their minimum monthly payment on liabilities. Because for all intents and purposes, this initial phone call is our pre-qual, where we are pre-qualifying the borrower, not to issue a letter or anything, just as we ask these questions to know which are the relevant options that we're going to be able to provide on our path to issuing our pre-approval, right? We pre-qual them on the phone, find out what's viable options. So we're going to talk about credit because I want to know what their minimum monthly payments are. I want to know what their total liabilities are, so that when I ask them what is their income, and I know what is the purchase price on the property that they're looking to do. Like if it's a purchase, you're going to ask them, do you have a price in mind? Have you been looking at homes in a certain neighborhood that you have an idea of what is the amount? Or if it's a refi, what is the amount that they're looking to refinance? If it's a rate and term, or if they're also looking to consolidate some additional debt. Now remember, DSCR loans, not applicable for debt consolidation. Just throw that out there. So again, we got the credit info, we got liabilities, then we go into income. Oh, and when you're talking about credit, this is probably one of the most important components, because we want to vet the credit as much as possible. So ask them, where did they obtain their credit scores that they're providing to you? Have they had the credit report recently pulled? Do they have any of the apps like Credit Karma or the Experian app where they can at least provide an idea of what their credit scores are and what their liabilities are? Right? So then we're talking about income. Are they self-employed? Are they an employee? Are they salaried, hourly? Is there any type of variable income like overtime, commission, tips, bonuses? These are all things you're going to ask, and you're going to be taking your notes, because you're going to be calculating some DTI there quickly as they give you this information. If they are self-employed, discuss the need for tax returns if full doc. And if self-employed, discuss the need for tax returns if full doc, and alt income doc options such as bank statement and P&L or DSCR. Find out what are the available assets for the transaction as needed, right? Sourcing, seasoning, gifts, possible reserve requirements. And we're going to talk about the property. What's the seasoning on title by the seller if it's a purchase, or borrower if it's a refinance? What are the number of units, and what is the property condition? Because you want to know, is it currently under renovation? Because it's not the first time we've had an appraiser show up at a property for a refi and an FHA deal. Turns out the property's under total renovation, missing kitchen cabinets, bathrooms, and the borrower is like, well, I was going to use the money to finish the renovation. So had you asked them that, then you would have known that what they really needed was an FHA 203K renovation loan. So discuss, then determine the program options. Now you've gathered some initial information, you're talking to the borrower, you want to discuss what their expectations are versus what may or may not be possible after your initial assessment. Because remember, a proper assessment aligned with realistic expectations equals a closed loan. You want to empower the borrower with information and knowledge to allow for an intelligent decision and create future referrals. Now, I already touched base on the analysis. Doesn't hurt to throw it on here again, because when we are doing the analysis, we also want to touch base on occupancy. Is it a primary home, second home, or is it an investment property? When we talk about the credit, besides the score and credit events, minimum payments on liabilities, and one that I left off the list there, disputed accounts. Are there any disputed accounts? Because remember, if there are disputed accounts, that may give you an issue with your agency loans, right? It may not give you an approval on a conventional loan. It may tell you, yeah, you're approved, but you got disputed accounts that we can't take into consideration, and your AUS approval is not valid. Manual underwrite, which doesn't exist for conventional. So now you got to talk to the borrower about getting those disputed accounts off the credit. If it's an FHA loan and your disputed accounts are over $1,000 in total, then you also have to downgrade to a manual underwrite. That's why it's very important to find out about disputed accounts. And again, the income. besides asking them those questions, you want to find out, have they even filed tax returns in the last 2 years? Because if they haven't, then full doc with tax returns is not an option. And when we talk about the assets, besides what's available in seasoning, we want to talk about, are they expecting any gifts, and have those gifts already been transferred? Because we want to make sure we have proper documentation of any gift transfers. If they give it to them in cash, oh yeah, my mom gave me $4,000 and she just gave me the cash and I put it in my account, you may have an issue, because if you can't directly show a $4,000 debit from the mother's account to match the $4,000 the borrower received on that date, you're going to have a real big problem documenting the $4,000. And then again, we touch base on the property, right? What's the value? What's the condition? Does it need renovation? Now, if it's an agency loan, do remember that conventional FHA, VA, and USDA all have selling guides. Those selling guides are pretty generic for each loan type. They vary a little bit in terms of the overlays that the different investors or lenders may put on the loans that they purchase. But the selling guides, the guidelines for those loan types do not change. They are what they are, but do be aware that there are overlays. And if you're going agency loan, is it something where you got an automated approval, or do you think you're going to have to go manual underwrite, which for FHA, VA, and USDA is going to be lower DTIs for a manual underwrite? Make sure you look at the minimum credit score requirements on agency loans, but do be aware that in the end it's subject to AUS. But you do note, for example, probably below a 620, you're not going to get anything on a conventional loan, and below 580 on an FHA, it's a minimum 10% down payment. So they start telling you some of, as it develops, be aware of the flow of the loan. And again, we did touch on disputed accounts. If it's non-QM, you please be aware that all non-QM guidelines are specific to the investor chosen, which means that you cannot generalize the scenario, for example, for a DSCR loan. You can't say, hey, for a DSCR loan, can a borrower operate the property as a short-term rental if they just bought the property 4 months ago and they just started doing short-term rentals 2 months ago and they don't have any prior experience as an investor? If that's the situation, then you know that that's just, they're all separate. So you have to go to the specific guideline for the investor that you chose and review the guidelines for that specific topic, because I'm going to tell you they do vary. Some investors, if you're using short-term rentals, require the borrower to have previous experience as an investor, regardless of short-term rental experience, just investor experience renting. So if they're a first-time investor buying that property and they're going to operate as a short-term rental, you have to make sure you choose the right investor, because some outlets will not allow it. And then if you submit the loan there, you'll be sort of disappointed when your loan comes back as a suspense, can't approve it because the borrower is doing short-term rental and they don't have experience. So then you may have to, definitely will have to pivot there to another outlet to submit your loan. And then obviously non-QM, you have multiple income types. It could be alt doc, it could be alt doc, P&L, bank statement, DSCR, asset utilization, or it could be full doc. And remember, full doc could be self-employed borrowers as well. I mean, just because they're self-employed doesn't automatically mean that you can't do them full doc with tax returns. It doesn't automatically mean that you have to do them non-QM, right? Agency loans have self-employed borrowers too. You just ask for their tax returns. And then if there's a co-borrower, is that co-borrower going to be an occupant or a non-occupant? Because that has a lot of repercussions, especially on an FHA loan, if it's an occupant co-borrower or non-occupant co-borrower. And last but not least, right, you've done your analysis, you've done your review, check the guidelines. Now you have to send viable quote options and follow up with your borrower. This happens at the end after you've done everything. Don't hastily want to send quotes. Now, What I like to do is if I'm having a good conversation with the customer, I'm taking my notes, we've built up some great rapport, I may already be able to load up some quotes. I mean, obviously, I got a little bit more experience than your typical MLO, but I love being able to send quotes to the borrower while I have them still on the phone, right? They're getting the quotes and we're discussing the quotes while I have them on the phone. If they're really into it and they're really serious, you got the rapport going. They're not telling you, hey, Jose, I got to go. I'm busy. I got to go walk my dog or something like that. You've engaged them. Take the time to review. And if you feel that you're able to, based on the information that they provided, and that you don't have to do any, real deep research because there's no odd scenario, then send them the quotes while you have them on the phone. Get feedback from them, because they may like it right then and there and tell you, yeah, Jose, I like that one. In which case, then they're either going to click the Start My Loan Application button, or you're going to click Start Loan for them so that they receive the link so they can start the application, upload their documents, and submit the application, right? But remember, you're going to review the specific guidelines for the loan option being sent, because all non-QM guidelines are unique to each investor, and agency guidelines have investor overlays. It's very important to make sure that your quotes are relevant to the borrower's objective and qualification. Do not send them random quotes after you've spoken with them and you've determined what they need, because then they may be a little bit disappointed and not take you seriously. And make sure to send multiple options, right? Multiple options for loan to value, right? With different down payment option. Even if they ask you for a 25% down, 75% LTV DSCR loan, I would also send them an 80% and an 85% just in case, so they know it's there in case somebody else offers it to them and they didn't know it existed. And then you never hear back from them. It's because they didn't think that you could do the 15% down option, which we can. Make sure you send multiple quote options for income types, especially if they're self-employed, right? Because you haven't reviewed their tax returns, and if they didn't tell you, I haven't done tax returns in 2 years, then for that self-employed borrower, I would send them a full doc and at least a bank statement loan, maybe a DSCR loan as well if it's an investment property. And again, if it's an investment property, non-QM, make sure you send them multiple prepayment options as well. I've seen too many cases the prepayment option is zero. And I've asked the MLO, why did you only send one option with no prepay? And they said, well, that's what the customer asked for. And I'm like, yeah, but you want to send them the additional prepayment option so they can put into perspective the higher cost of the zero prepay, because maybe they'll opt for a 1, a 3, or a 5 if they see that it's a substantial savings in their monthly payment. They don't know. Remember, they're not the licensee. We're the licensee. They're not totally aware of all the options that are out there. And like I just previously stated, self-employed borrowers can qualify for agency loan. Doesn't have to be non-QM, doesn't have to be a bank statement. But also note that if they want to close in an LLC, then you got to go non-QM. And also remember, DSCR loans can close in a personal name. I've seen it where in some cases, borrowers being told that they got to close in an entity if it's a DSCR loan, and that's absolutely not true. It can be personal name or it can be closing in an entity. And last but not least, make sure if you did not send a quote to the borrower while you had them on the phone, then please make sure that you follow up with a phone call immediately after sending the quotes, unless you send the quotes at 11 o'clock at night or 12 o'clock at night. Make sure that you follow up with a phone call immediately after sending the quotes to ensure that they receive the quotes, to discuss the details, build rapport, and hopefully cement the deal and get that loan application submitted. So are there any questions? Because we covered some pretty good information here. This is a good flow for a call that I would love everyone to follow when at all possible. I know sometimes borrowers don't want to stay on the phone. They may be in a hurry, but if you see that they're engaged, you should not be in a hurry to hang up just because you want to send a quote. Get all the relevant information so you can provide a thorough and relevant analysis, send viable quote options, and get good loan applications. You do not want borrowers applying for a loan without you having discussed it with them, hopefully. And definitely without you having sent some relevant quotes to the borrower. Do not just send the borrower your application link. You want them to apply, talk to them, find out what they need, or if they texted you and told you what they need, or if they emailed you and told you what they need, that's okay. Then send them the relevant quotes, then follow up so that they start a relevant and viable loan application. So I don't see any questions. I'm going to give it a minute, see if any questions come in. Yeah, we'll have copies of this uploaded to our system. This, one of our MLOs want to know, is there a summary of this in the Knowledge Center? This presentation will be uploaded as well. Plus, we record all of these trainings. All right. So any questions regarding the topic? Because yes, we do. I already answered that we do have a summary. We will be uploading. We do upload the presentations. Okay. Well, I don't see any questions on the actual topics that I covered. Yes, you can get a copy. All right. Well, give you another minute, people. Think about your questions. All right. I don't think we have any additional specific questions regarding the subject matter. Anybody need any clarification on the processes that I explained for when you are making the calls? No? All right. Well, yeah, I think I was pretty thorough and detailed. So hopefully you guys got something out of this. If you follow this flow, I can guarantee you, you're going to build more rapport. You're going to engage more borrowers. You're going to send better quotes. You're going to get more relevant loan applications. And you're going to get more closed loans. So everybody have a great day. We don't have any training tomorrow because we're closed for Thanksgiving. So everybody have a great Thanksgiving with your family and loved ones.